Right, we've just had this data come out for the US session. That's the data done with, and it's positive. Positive for the US dollar, positive for the US economy, positive for yields. So let's look at this. Let's look at the yields first. I forgot to record the meeting, so I'm just going to do a quick rendition, essentially of what we talked about, and looking at what's going on post the data. Now, um, no. Right. So, following the data, it came out at when 8:30 was it? My time, New York time. Yeah. Um, we had an initial spike up, but a move to the downside in yields. Right. So, as I said, the market is pretty disjointed at the moment. We had a spike in the dollar, and it subsequently started to come off again. News was posted to what? Good question. So someone's asking, why is the dollar falling? um, what we were talking about, regardless of the news, okay, is that the dollar is high up. And I'm not going to go through the dollar so much because we already covered the dollar in another video. But we've come up to a key level, 100% expansion of the range of the day so far. That rally, right? So we had that range of Asia and London, and it rallied up into a key daily level going back to November last year, acting as resistance. We are day three of the week, and what I like to look for is a scenario that we pull back into Monday longs, Tuesday longs, Wednesday longs, 3 days of longs. So we're looking for the long squeeze on a Wednesday. Okay, so across the board, that would look like a short squeeze in gold. Now, gold, when we look at gold, we can see that it's in a support area on a daily chart. So here is the daily chart. And I'm sorry if this sounds rushed, but we've got a lot to get through. So, and not a lot of time left until Wall Street opens, 9:30, 50 minutes away. Um, so we've got a well-respected area. So uh, resistance, support, resistance, support, 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 support. Right. So we talked about this price dipping into this area and reversing for the day. So dump, pump. We've got an M formation, right? So that is a reversion pattern. We've got a displacement, so it's dropped 1, 2, 3 days of drop so far. So all of that stacks up to a upside correction. Could be wrong, just a thesis. So if we start seeing a deceleration in the gold price on the lower time frames, and we can come right down to a 5 minute chart to look for this, right? So we're starting to see that deceleration. We've already got a W formation in place. That's a bottoming uh, scenario. We're still on the front side of the range. Okay, so we're still bearish while below that trend line. But over the next 50 minutes, what I'm hoping to see is a scenario where we're starting to build bullish structure, right? So we're looking for this to bottom out, break trend line, and move up. Same scenario for the stocks. We've already started to see stocks move up. What I want to see is a drop and then a pump. Same with NAS, same with US 30. Okay. If we come out to an hourly chart, this is the US 30 we're looking at the moment. we can see that it's come up to a 50% mean reversion of that drop. So consolidation. So this is the day's range. So we dropped, consolidated, dropped, and now we're creeping up into that drop. What I'd like to see before the Wall Street Open is a move lower to retest yesterday's closing price, and from there a rally. That would be awesome. But that all depends on whether this dollar is going to continue lower, whether yields are going to stay down, and if so, then we should get a rally in the stock. Same scenario for the S&P, targeting last week's lows and all that congestion up there. Same with the NAS. Okay. The euro, we're looking for the move up in the euro. So dump, pump, right? So we're monitoring this on a 5-minute chart, just checking to see how this is playing out. Right, we're in a bullish scenario at the moment. W formation, prospects of a move up. Okay. I'm just hesitating. I'm just paused there at the thought. So we've got this volume profile over here. We can use that as a guide, potential resistance. If it breaks that, we've got a fast move up into test the breakout area over here where it broke out. Now in pips, it's not a lot. That's a 10 pip move. But perhaps we need to see that break of trend line, drop, and then another move up. So we're starting to break that there. Aussie moving up in line with a risk on bias for the day, moving up into resistance. Yesterday's closing price just below 64. Last month's lows tested, rejected. Perhaps we're going to move up, break of structure, come back in for a continuation higher. Oil, we're looking for oil to continue higher. Looking for it to continue higher, and that would be the fuel to help the Canadian dollar on its way lower. So we're coming in towards yesterday's closing price over here. So all of this in here is support. We want to see it break yesterday's closing price, break of, move back in, continuation lower. I don't know how much that will come back in, but that's what we would anticipate. These could be a firm support area as well. So that would be the scenario if oil continues higher and if the dollar sells off and yields stay low, then that's what we're looking at. Cable, too choppy. I'm not interested in cable. Right, so I think that's we've done a pretty comprehensive look there across the board. So we'll wrap that up. and I can start looking to see how we develop over the course of the next half an hour.